Inheritance is never just money, it's a form of influence.
We're talking about the largest transfer of wealth in human history.
It takes a lot of work and usually many years of preparation to get it right.
60% of people say that they regretted how they had used an inheritance. Now that's a huge number. Why is it so high? I'm Greg Davis. I'm head of behavioral finance at Oxford Risk, and I study how and why people make the financial decisions they do. The baby boomer generation that has built probably the most wealth of any generation throughout human history, they are coming to the end of their lives.
What does that mean? It means the $124 trillion of wealth that's getting transferred to the next generation. I'm Jared Franz. I'm an economist at Capital Group.
It is hard to get your mind around how much money this actually is. It is going to reshape society in ways that we have yet to really have the ability to figure out. Hi, I'm Mike Van Wyk. I'm head of global market research for Capital Group. And what I do is I research human behavior when it comes to financial investing.
A Capital Group research shows 47% of grandparents include not just their children, but also their grandchildren in the wealth transfer plans. My name's Chenan Sor. I work for client education and Capital Group. What I do every day is helping financial advisors to have successful client conversation.
It's a very surprising thing. As wealth transfer is happening, we see almost half of those inheriting are actually the grandchildren themselves.
This is pretty simple demographics. People are living longer. That means that their children often are already later in life. They have forged a career.
So these grandparents might be looking at their kids and saying, yeah, they don't really need it, but where can my incremental dollar really add value?
The grandparents are looking at their children and feeling their grandchildren are facing a much longer path, and in fact, maybe facing a much more complicated future.
What we see in the data is that it's not just the monetary wealth that's coming over, it's non-monetary assets. So these are things like art or real estate. That could be the challenge for this generation of, what do I do with this?
%88% of wealth holders said they'd communicate the wealth transfer plan very clearly, including who gets what and the amount. Now, if you ask the same question to the wealth recipients, the experience is very different. This communication gap is crucial.
Why is this so difficult? Well, you've got two of the most awkward conversations you could possibly think of having. Money is awkward, death is awkward.
Just because a parent or a grandparent has said, I've told you, doesn't mean that the person receiving that has heard it. For the rising generation, they're looking for different answers. They're looking for, do you trust me? Am I worth this? Do you value me? My name is Jess McGawley. I'm the founder of Dallington, and I work with ultra-high net worth families as they navigate the transition of coming into wealth.
The challenge is, with that communication gap in place, it can cause the money that is transferred to not be used in a way that's most effective by those who are receiving the inheritance.
What doesn't work is when parents assume that because their children have grown up around money and they've grown up around entrepreneurship and drive, that somehow that will just, by osmosis, transfer into their children.
Starting early, very valuable. Ongoing conversation, very valuable, but try to codify it. We've had this discussion. Let's try and take the 3 or 4 principles that we've discussed, put them into writing, and it opens up areas where there's lack of understanding.
People receiving wealth. What is a good experience? There's no surprise. They know when they will get what, and they can plan accordingly.
There's freedom in having a practical plan.
Be ready to relinquish control. Say, this is going to be yours, not mine, yours, and use it for what's right for you.
natural outcome of the communication gap is inheritors often experience regret in the way that they've used the money.
Almost a third of wealth recipients regret not investing enough. 20% of them wish they invest more in equities.
Very often, if I've inherited cash, very useful to me. Actually, it's more fungible than many other things. But what people tend not to do is to take that cash and put it back into the markets, which in a short period isn't a problem. But if 10 years later you still haven't reinvested that money, you have given up an enormous amount of foregone investment wealth over that time period.
You should watch our first video.
Yes, indeed. The themes always come around.
One of those choices we see within our research is that the wealth transfers wish for that next generation to work with a financial advisor. They feel that that's one of the most important things that the inheritors could do in order to get to successful outcomes.
Historically, we've been really good at preparing and protecting assets and money, but we haven't been so good at helping the people who are going to receive those assets and that money into how it will impact their lives.
When wealth is transferred, it is not always the case. In fact, it's quite seldom the case that the advisory relationship is transferred.
According to Capital Research, around 25% of inheritors seek help from financial advisor. 25%. That is a very low number. Lawyers, accountants, much higher number. We don't know exactly why that is the case. But what we do know is, in recent years, there's explosive growth in technology, financial product information, and knowledge. Some people might think, well, I have all this information in front of me. What do I need a financial advisor for?
There's definitely a worry, and I think every generation or every financial institution will have to re-underwrite what the value proposition is for these younger folks.
It's a really big shift because what worked for the previous generations is not working for the current one. The average rising gen does not need to go to a private members club or be taken on a racetrack day to engage with their wealth manager.
I think it's the financial advisor's job to take it on themselves to really show what they can provide for their clients.
They need to change. They need to be ready for this more high-touch generation that's going to expect, hey, I'm going to get up in the middle of the night, 4 a.m., watch some Netflix, and then look at what my assets are doing.
It needs to drop a lot of the jargon. The financial services industry is full of numbers and it's full of jargon.
The investment manager, that's what they're trained to do. They're trained to say, this investment gave you a 5% return and it has a Sharpe ratio of 4. This generation is saying, okay, that's helpful, but how is it helping me to retire in 20 years?
The great wealth transferred is a seismic shift. The amount of money is mind-boggling. It's over $100 trillion. Anytime that amount of money goes into motion, you know it's going to drive change.
If you have a huge block of wealth that is being suddenly siphoned to different purposes, that of course has massive knock-on effects in the economy, in the markets, because it's being invested in different things.
As the money transfers to the Gen Z generation, we expect there will be a lot of different impacts that will drive for them. It certainly helps them reach their financial goals and gives them the means with which they can pursue their investing goals, but also it is likely to spark them to move more into a direction of entrepreneurship.
The biggest excitement about this situation to me is this contradiction that we think of in terms of entrepreneurship is dead, that growth is dead. I think the opposite could be true. Could this lead to a global jump in entrepreneurship, a global jump in business dynamism?
So you're an optimist?
I've been accused of that and I happily accept it. This next generation could be sowing the seeds of really important inventions, entrepreneurship in the future that could create a society that's different but ultimately better than it is now.